So as you are probably aware, there are excise taxes on alcohol in the state of West Virginia. These are essentially a type of sin tax which discourages unhealthy behaviors. Alcohol, tobacco is a good example. You want to de-incentivize individuals from consuming these products that may be harmful to their health and cause additional concerns, not just from their own personal standpoint, but also for society. And so we have in West Virginia 3 basic types of alcohol that are taxed in the state: beer, wine, and liquor. As you can see up here, the beer barrel tax is $5.50 per 31-gallon barrel. That is the excise tax on beer from a distributor standpoint. There is also a wine liter tax that is equal to 26 and 406 1/1000 per liter, again an excise tax. Liquor, and distilled spirits are treated a little differently in that they are regulated by the state. So there's not a formal excise tax on the sale of liquor or the distribution of liquor. Instead, they are subject to a price markup and also to license fees. And these types of fees and the amounts vary by the person or entity that is distributing these within the state. In addition to excise taxes, we also have sales taxes on alcohol. Our 6% statewide sales tax is subjected on all sales of alcohol: beer, wine, liquor, it does not matter. And there is also a tax at the local level for currently 16 municipalities that level a local sales tax. This is again for sales of all alcohol in the state. We added, I believe, 9 localities effective July 1 to this list, so there has been momentum picking up in the number of localities that are levying local sales taxes. The first was Williamstown in October 2011. So to the extent that we talk about very rough estimates of local municipal sales taxes on alcohol, those will begin in fiscal year 12 and go through fiscal year 14. Local sales taxes for the sale of wine and liquor only, that is a 5% local tax. This is not, of course, applied to the sale of beer in the state. It is only on wine and liquor itself. All right. Before we go into each of these taxes in great detail with how they are structured in the state, I wanted to do a brief analysis of the region, if we consider West Virginia and each of its 5 surrounding states, to look at how each of these taxes compare. What you're seeing here are rates as of January 2015. They are all rates per gallon, so they are kind of normalized so we can compare them much more easily. Obviously, West Virginia has a 31-gallon rate, and that may not be the same in other states. So we can see in West Virginia, the per gallon rate for beer is 18 cents. That is falling above average slightly. The regional average is 15 cents per gallon among these 6 states that we're seeing here. Wine is at $1. Again, that is above average. The regional rate is 75 cents per gallon. And then liquor, you see the 1 in brackets. That is actually signifying that there is state regulation of sales of liquor in the state. You see that in most of our surrounding states as well, with the exception of Maryland and Kentucky, which each do have, they do not have state regulation of sales of liquor. What you can see is that Ohio, their beer rate is pretty similar to ours. Virginia is higher, and then Pennsylvania and Maryland and Kentucky are quite a bit lower. But this is just kind of a brief overview of how these states look in comparison to West Virginia. We are going to look at this at a national level as well. If you're interested, for the 2 states that we have that do levy a liquor tax, as is, the average rate is $1.71 per gallon. And so we'll move forward speaking about each of these types individually because the taxes are structured in different ways. We'll start with the beer barrel tax, and speaking strictly of the excise tax, a little bit of history here. The original tax was levied at $1 per 31 gallons in 1933, so toward the beginning of the Great Depression. There were a few increases throughout the next roughly 2 decades. The first was a raise to $1.37.50 per 31-gallon barrel in 1937. About a decade after that, it was raised again to $2.75 per 31-gallon barrel. And then the last increase occurred in 1951, and that was a raise to the current $5.50. Also at this time in 1951, license fees were introduced, as well as bonding requirements. The licenses that we currently have in the state are for Class A and Class B. The definitions are available to you. Essentially, Class A is required for establishments that sell non-intoxicating beer to be consumed at the site of sale. You could think about a bar or something along those lines, a social or fraternal or private club, for example. Class B licenses are required for establishments that sell non-intoxicating beer to be consumed away from the site of sale. This would be more along the lines of your retail stores, such as Kroger, if you were to go to a grocery store and purchase some type of beer, that they would have to have that type of license. Just to give you a rough range for the annual license fees, they tend to go from about $10 to $1,500 annually. And I also provided you the non-intoxicating beer definition, per statute. I did abridge this a bit, but it does have all the key pieces, I feel. But these are referring to natural cereal malt beverages such as beer, lager, and ale with no caffeine infusion, with at least 0.5% alcohol by volume, not to exceed 9.6, alcohol by weight, or 12% by volume, whichever is greater. Revenues that are gathered from the beer barrel excise tax are deposited in the general revenue fund. So speaking more about excise taxes on the beer barrel tax and as well as sales taxes on beer, going into the revenue perspective, revenue sources for the beer excise tax alone, this is not including sales right now, but the revenue sources include sale of licenses for either the sale, distribution, manufacturing, bottling, processing, and serving of beer. And then there's also, of course, the barrel tax on each 31 gallons of beer manufactured. From fiscal year 10 to fiscal year 14, doing about a 5-year trend, we saw a decrease in beer barrel tax collections, net collections, from 7.6 million to 7.4 million. The reason that this is a net number is that it is inclusive of any refunds that were paid out. And this does not, just to make very clear, this does not include any license fees that were collected. This is solely from the beer barrel tax, excise tax collections. It's a decrease of about 2.5% roughly. Additionally, there are also, as I mentioned, state and local sales tax collections. State sales tax, of course, is the 6%. And those have seen an increase of approximately 4.4% from fiscal year 10 to fiscal year 14. So over those 5 years, an increase from 23 to 24 million respectively. The local sales taxes, I will caution you, these are very, very soft estimates. It's very difficult for us to ascertain the location of the sale. And of course, there have been more municipalities coming on board with having local sales taxes. So these are just very rounded estimates, just for a brief illustration of this. But they have seen an increase from about 0.1 to 0.2 million from fiscal year 12, the first year that there was a municipal sales tax levied, to fiscal year 14. What this chart is illustrating is that we of course have the excise tax and also the sales taxes. These are just looking at state sales taxes, to be clear. These are not including any local numbers whatsoever. The excise tax is net revenues, again, less any refunds that were made in each of these years. That's being represented by the blue line that you see a downward curve of, and also by the left-hand axis. The right-hand axis is our state sales tax collections on beer, represented by the red line, which you're seeing an increase over this period. The reason that you're seeing these divergent trends, typically when you levy a sin tax or an excise tax on a consumption item, you tend to want to see consumption decline over time. It's a de-incentive for individuals to consume these types of goods. So we are seeing what's pretty common with this, the decline in the excise net revenues on beer sales, and then the increase in the sales tax could be reflective of more purchases in state. It could be also reflective of changes in prices, if prices are increasing. And I promised a national comparison. West Virginia, to recall, had a rate of 18 cents per gallon. These are, again, all rates per gallon. The source is the Federation of Tax Administrators. You're seeing the scale, excuse me, the red states have the highest rates in the scale that we set, and the purple states have the lowest. So you're actually seeing some pretty high rates occurring in the southern states, starting with Louisiana, Mississippi, Tennessee, and heading eastward through Virginia, then all the states below that. We've already talked about our region, of course, but you can see that we are kind of nestled in a mid to lower tax rate on beer as far as the per gallon rate is concerned. So this is just kind of an interesting chart, I thought, to show the relationships between these across the states. Tennessee had the highest rate among these at $1.29 per gallon. Wyoming had the lowest at 2 cents per gallon, and the US average was 29 cents per gallon. These are representative, I believe, these are as of January 2015. In addition, in addition to the excise taxes, these aren't being reflected in this chart, but just to mention, about 44 states also impose their state sales tax on the sales of beer. There are 5 states that do not have a general sales tax currently. Those are Alaska, Delaware, Montana, New Hampshire, and Oregon. So there will be additional taxes in addition to this. This is just reflecting the excise tax. Moving on to the wine liter tax, again, we mentioned earlier, the rate is 26 and 406 1,000 per liter. Excise tax net revenues for volumes of wine sold in West Virginia increased about 16.6% during the 5-year period that we're looking at, fiscal year 10 to fiscal year 14. That's a change in dollar values of about 1.8 million to 2.1 million between those years. Again, just to point out, these are net revenue figures. So they are less any refunds, and they are not including any license fees that were collected during this time. Wine liter tax revenues are also deposited into the general revenue fund. And I gave you just a few brief stats about the wine license fees. I don't have the ranges handy with me, but the first $200,000 that are collected from the sale of wine license fees are deposited into the tax commissioner's wine tax administration fund. Any remaining funds are deposited to the ABCA Commissioner Wine License Special Fund. And of course, for comparison's sake, looking at this chart, again, we have our excise tax net revenues for wine on the left-hand axis, also being represented by the blue line, that I realize is running very closely with the red line. And then on our right-hand axis this time, we have state and local sales tax collection estimates for wine. It's important to note that this local number is the local 5% wine tax. It is not including any local municipality sales taxes, because those are very difficult for us to ascertain due to it being difficult to find the location of the sale or the source of the sale. But what we're seeing here, as opposed to the beer excise tax chart, which was showing a decline over time, we're actually seeing this increase. This could be indicative of increased consumption of wine over this 5-year period, and going along with the sales tax numbers, this could be indicative as well of either more sales occurring in the state or possibly as well increases in the cost of wine over this time period. Don't believe I mentioned before, we talked about the excise tax. Total sales taxes on wine, these are just the state numbers actually, they increased 25.7% during this period, for illustration. Again, we have our national map, and the states that you're seeing in black are states that have wine sales that are regulated through the state, similar to our liquor. But Pennsylvania, Vermont, or New Hampshire, Wyoming, Utah, those are having, those have statewide regulations of wine sales, as is, of course, we have liquor sales. Again, the scale is very similar, different numbers, but the red is indicating the higher rates and the purple is indicating the lower rates per gallon as of January 2015. And you're not seeing as much of a pattern as there was with beer. Still, some of the southern states tend to have the higher rates, but now we see Texas, Louisiana, and Mississippi having among the lowest on this particular graph. West Virginia's rate, just to remind you, was $1 per gallon, plus any additional taxes, such as sales taxes. This was, again, above average for the nation. The U.S. average was 84 cents per gallon, according to this data. Alaska had the highest rate of wine excise taxes. That was $2.50 per gallon. Louisiana had the lowest at 11 cents per gallon. And if you're interested, I don't think I mentioned them before, Washington, D.C.'s rate is about 30 cents per gallon. In addition to that, most of the states that have a general sales tax do apply this, as well as possible other taxes such as wholesale taxes, for example, on wine in their states. Moving on to liquor, as I mentioned, these are regulated by the states, so we don't really have good numbers for an excise tax per se on these. But wholesale and retail sales of liquor in the state have been regulated by the ABCA since the early 1990s. This was the time that they began to regulate these and to also issue licenses to retailers. Retailers are asked to bid for licenses. They're issued in 10-year cycles. So we tend to see peaks happening around 1990, of course, when the licenses were first issued. But we see peaks in revenues around fiscal year 2000, fiscal year 2001, 2000 generally higher, and 2001 will be lower, but still a noticeable peak. And then again, 10 years later, fiscal year 10, there's a jump, and then also fiscal year 2011, and then they will tend to taper off in the interim. Licenses for liquor are issued as either Class A or Class B. The ranges are approximately $10 to $2,500 annually. And liquor revenues largely are derived from licensing fees, markups, which Commissioner Moses is going to speak to in just a few minutes, and also liquor profits. Any funds received by the ABC are deposited into an operating fund. Just to give you a point of reference, as far as liquor is concerned, state and local sales tax collection estimates increased about 7%, a little over 7%, during the 5 fiscal years that we are looking at. That was an increase from approximately $11.7 million in fiscal year 2010 to about $12.6 million in fiscal year 2014. And once again, we have our national chart. The black states, again, are those that have state government control or regulation of liquor sales. You can see that there are definitely several more that do regulate liquor in this way. There are a total of 17 states that actually have a state-regulated liquor system, West Virginia, of course, being one of them. Again, the scaling is basically the same. We don't have a purple category in this point. But you can see that there is, again, a little bit less of a pattern as far as the rates themselves per gallon of liquor. Washington State had the highest rate among these, about $14.27 per gallon, whereas Maryland had the lowest at $1.50 per gallon. The U.S. average as of January 2015 was approximately $4.54 per gallon. And of course, once again, those states that have a general sales tax, typically all of them, for the most part, do levy that on the sales of liquor as well. I wanted to show this chart just to give you an idea of, from a sales tax perspective, and these are just looking at state sales taxes on alcohol, but I wanted to give you an idea of about where these are coming from by alcohol type that we've been talking about. You can see that very largely, almost 70%, beer is making up a very large proportion of state taxes on alcohol in fiscal year 2014. This proportion over the 5 fiscal years that we've been looking at, they've maintained pretty steadily. There has been a slight decrease from the low 70s to the high 60s as far as proportion for beer. That is being made up largely by wine, which has been increasing slightly. Currently, as of fiscal year 2014, that is holding about 11% of that proportion. And liquor has shown a little bit of fluctuation during this time, but for the most part, it has maintained about 19.8 to 20% of the state sales taxes on alcohol. So in total, state sales tax revenue has increased nearly 7% between fiscal year 10 and fiscal year 14. I thought that was a nice illustration of where these taxes are coming from. For a little different comparison, the Tax Policy Center has put together state and local tax revenues from alcoholic beverage tax. These are representative of non-sales tax collections, so these would be along the line of your excise taxes. License fees are included in this, but these are not including sales tax figures. But these are the most recent they had available was 2012. These come from the census, so there's a little bit of a delay due to that. But they looked at across the state, across the nation, each state, how much their alcohol revenues were. And nearly $130 million on average was collected in revenues in 2012. The highest state for alcohol revenues, state and local, was more than $937.6 million in Texas, and the lowest was approximately $1.7 million in Wyoming. For comparison, West Virginia fell at about $24.8 million in alcohol tax revenue. This puts us in the bottom quarter based on these figures across the state. And of course, it's always difficult to look at these dollar values because we have different populations in states. So doing a per capita assessment is usually very helpful because it helps scale these a little differently. Obviously, Texas is a very largely populated state. And as you can see in that second set of bullets toward the bottom, although it had the highest revenue, it had the lowest per capita rate, about 66 cents in 2012. The highest per capita rate was about $720.51 per capita. That was in Alaska. And then the average was about $51.34. Again, looking at West Virginia, we were about $4.56 per capita, still maintained the bottom quarter among the states in the US. This is a nice illustration. I also have this broken out as far as our neighboring states for our region, if you will, because it's always helpful to see how we compare to our border states. These are, again, the same data. We had the lowest revenues, and where it says above average, that was a typing error on my part. We're below average as far as per capita as well. Our rate was $4.54 per capita, and the average was $8.74 per capita. Among our surrounding states, Pennsylvania had the largest share of state and local alcohol tax revenues for the region. It was about 42%. And as far as revenue per capita was concerned, we saw the largest in Kentucky, about $26, almost $27, and the lowest in Virginia at $1.57. Just again for comparison, the average regional revenues were nearly $140 million. And again, we had about $25 million in 2012. Wanted to go over a few related funds and a few additional taxes as I wrap up this discussion. One being the Drunk Driving Prevention Fund. As its name suggests, obviously this is intended to prevent drunk driving. This was established with the creation of the Commission on Drunk Driving through the West Virginia State Police. The revenues for this are collected through the 6% sales tax, but only the portion on sales of wine and liquor that are purchased from retail liquor licensees by private clubs. So these would be, for example, a club that required a membership to come in. Annual net revenues on average have been about $1.3 million during these 5 years for this fund. That is in, and the fund revenues are dispersed to state police, also city police departments, county sheriff departments. It helps to compensate them with some of the costs that they have as far as operating their driving under the influence prevention programs or DUI programs, prevention programs in their areas. And we've been talking quite a bit about the local 5% sales tax. That is, again, only on sales of wine and liquor in the state. Collections for these are redistributed quarterly to counties and municipalities based on the location of the sale. We do have much better data from a wine and liquor sale perspective. That's why we were unable to really give a good estimate for beer local sales for just like the 1% levied in certain municipalities. But local sales tax collections for this 5% tax, they have increased from 7.8 million, in fiscal year 2010 to 8.9 million in fiscal year 2014. This is an increase of approximately 13%. On average, we're seeing about 8.3 million per year, fiscal year 10 to fiscal year 14. It's interesting among these data, especially for these 5 years, liquor has made up consistently about 2/3 of this, and wine sales are obviously the remaining 1/3 of these collections. And of course, just to reiterate, this is just for the 5% sales tax. It does not include any of the 1% local municipal sales taxes that began in fiscal year 2012. For another comparison among other states, Governing Magazine posted an article that was very interesting using fiscal year 2014 data, looking at sin taxes, the burden of these on state revenues. Again, fiscal year 2014 data, these are including more than just alcohol, so we'll give you that precaution. They're including revenue from alcohol as well as gambling from such sources as casinos and racinos. This does not include state lottery funds. Also tobacco products and video gaming, to see what proportion of these sin taxes are actually making up of the total state revenue. And it's very surprising, we're actually third on the list as far as the sin tax burden is concerned. Rhode Island had the highest burden at almost 16%. They largely are gaining their sin tax revenues from gambling. The tobacco revenues were a pretty close second for them. Nevada was next at about 15% burden. Unsurprisingly, due to Las Vegas, I'm sure, gambling revenues make up a very large portion of their sin taxes as well. It's important to note in Nevada, for example, there is no state income tax, so this could be aiding in its dependence on sin taxes from a revenue perspective. If they were gaining additional revenue through an income tax, that might change potentially drastically. It depends on the numbers, of course. West Virginia, as I mentioned, was third. We had about 11.5% of a burden. Our largest portion of sin taxes was also attributed to gambling revenues. That was largely from racinos, a little bit from casinos, and again, that does not include the state lotteries, so that would even possibly adjust these figures if they were included. And then New Hampshire and Delaware pull up the fourth and fifth slots as far as the largest burdens, about 9.9% and 9.4% respectively. As you can see, New Hampshire does not have an income tax, as with Nevada, and it also doesn't have a sales tax, so this is probably helping or harming, whichever way you want to look at it, their dependence on sin taxes. And Delaware does not have a state sales tax, so that is contributing as well, potentially. I don't have it up there, but just to give you a bit about our surrounding states, Pennsylvania was the only of our surrounding states to be in the top 10 by burden, and that was about 8%. The next highest was Ohio at about 5%, Maryland at 4%, Kentucky at nearly 3.5%, and Virginia at 2%. Okay. And I know that you all have a presentation coming up on tobacco taxes. I just wanted to touch very briefly on tobacco excise tax revenues, because this chart is, again, very interesting from our perspective, and it does illustrate, again, the decrease in excise taxes over time that you tend to see from a sin tax perspective. These are excise taxes, tax net collections, again, less any refunds on tobacco products, and these are all tobacco products, cigarettes, and others as well. You're seeing this nice decline over time, about 11% roughly, from fiscal year 10 to fiscal year 14. And again, this is possibly indicative of decreased consumption of tobacco products over this time. That's what we're hoping, obviously, of course, with the tobacco excise tax, because tobacco is very harmful. So that is all that I have.
Good morning, everybody. My name is Ron Moats. I'm Commissioner of the Alcohol Beverage Control Administration. Elizabeth Perdue really touched on most of the tax issues that deal with ABC. Really what I want to talk about briefly is our markup. But before I get to that, I just want to give everybody a brief history of the agency and how we operate today. Some of you may not know that. So, we were created, the agency was created in 1935, right after the repeal of Prohibition. We had state-run stores from 1935 up to 1990. Then Governor Caperton introduced a bill that was passed by the legislature to privatize our retail liquor stores. 98 market zones were created, and within those zones, a fixed amount of stores were placed, and we had basically blind bids placed in that first year of 1990. And through, I think it took 3 bidding processes, we gathered about $15 million out of those first 10-year rights to sell liquor. And the law stated, and it's still in place today, that every 10 years those rights will be rebid. And in 1990, 15 million. In 2000, the bid process came up with about 22 million, and in 2010, the bidding process came up to about 38 million. So you can see over, really in a 20-year period, over 3 bidding processes, the state has collected $75 million just from the rights for these retail liquor stores to sell liquor. And that's been a substantial, profit and income to the state. The agency also, we issue licenses to all entities that sell alcohol. We have about 5,000 on-premise licenses, which include 5,000 retail licenses, which includes on-premise and off-premise licenses, and then about 1,500 non-retail, which includes the wineries, distilleries, out-of-state, in-state, distributors, wine distributors, beer distributors, representatives license, trucking permits, those kind of things. So we have a very busy licensing department, as you can see. Also, we enforce all the laws in the state that sell alcohol. So anytime you see any of these problems with these private clubs, the violence going on, we have to take care of all that. And we are also the wholesaler of all distilled spirits that go through the state. We have a warehouse where liquor is shipped in by our suppliers, and then it's shipped out by a private trucking company that we have contract with to our retailers when we get an order. And all those products are in what we call a bailment warehouse. We don't own the liquor that's in there. The distillers or suppliers send that liquor based on reports that we give to them, and they replenish the stock. But once we get an order from a retailer, then we collect the money from the retailer, then pay the supplier. Prior to 1990, before we privatized, we had a warehouse that we bought all the liquor. So everything that came in that warehouse, it could sit there for a year, and we owned that inventory. So that was kind of a burden on the state for us to have to own all that inventory and just sitting there and not selling it. We actually purchased our current warehouse in 1994 through an act of the legislature that allows us to do that. The markup is currently at 28%. In 1990, when we went through the process of deciding how we wanted to privatize the stores and what kind of process we wanted to use, the decision was made in the governor's office to create a markup to basically remain revenue neutral. We wanted to make, in other words, we wanted to make the same amount of money with the wholesale-only operation as we were doing with the private store, with the public stores. So the 25% markup was put in place. And that was increased in 2003 to 28%, and that's where it stands today. Basically, we were put on schedule by the budget office, a monthly payment schedule or transfer schedule. By law, all of the money we make goes into the general revenue fund. So the budget office puts us on a schedule every month, and the last few years it's been around 16 million, maybe just over that, which does not include the licensing fees, which is about $2.5 million a year. And basically, that's how the markup operates. That's how we operate with it. We have a fund that the money goes into, and then that money is transferred into the general fund based on that schedule that the budget office gives us. And I also wanted to say we have several of our private retail liquor store owners over here, so I would encourage you to speak to them on how the system operates too.